Hey there, everyone. Hope you're having a good start to your week. And if you're on spring break this week, hopefully you guys are somewhere sunny. But I just want to send across your weekly market update for the week of March 9th through March 13th. So starting with the big picture, kind of national housing inventory and demand. So we did see housing inventory dip slightly last week to run about 690,000 homes, but it's still 8% higher than it was this time last year. So year over year, we are seeing a little bit more inventory, which means more homes in the market. So there's more selection for those buyers to choose from. Around 33% of listings have had price cuts. This is kind of similar to what a normal market shows, so nothing to be concerned with there. Around about 45,000 sellers who removed their home last year actually relisted it in January. So that's going to be signaling that we're expecting a better, stronger spring market. So what does this mean for buyers? So more listings hitting the market obviously means more options for you guys. So you got more to choose from. And for sellers, obviously leading into that spring market is the strongest time of year to list your home. But pricing really does matter since buyers have a little bit more choices than they have in previous years. And then here's a quick stat that I thought was fun to share with you guys. Supply shortages, homeowners are staying a little bit more longer in their home than we have seen in the past several years. So, the U.S. housing market still has a shortage of more than 4 million homes. New construction hasn't kept up with the household growth for years now. So quick fun fact, about 1.8 million younger households like the millennials and Gen Zs are missing from the market because homes are a little bit too expensive. So they're either staying in their parents' house a little bit longer or they're deciding to rent instead of making their first time purchase for their home. So quick bar graph here. So the typical house owner now stays in her home around about 12 years. So we did see it kind of peak up a little bit before the pandemic, then drop off again. And now we're seeing it pick back up again, kind of similar to, close to where we were before the pandemic. So interesting to know that, on average, a homeowner stays in their home around about 12 years now. And then kind of where the hottest markets are. So, two little photos here. So first one here is the top 10 coolest markets. So ones that have the slowest market. There's a couple cities here in Texas, Hawaii, and then we got Florida over here, and then all the way up here where is this? Ohio. So couple cities here that are cooling off a little bit. Then top 10 hottest markets. We're seeing a lot here in the Northeast, down a little bit closer to Texas, and then all the way to the top left in the Northwest states. So we are seeing a little bit more of the hotter markets, especially in that Northeast location here. But nationally, we have seen home prices are up 0.7% year over year, showing that, we are seeing growth, but it's kind of slow and steady. And then some markets are still cooling, like I mentioned before, especially the states like Florida and Texas, where inventory did jump up a little bit with that new construction. And then last thing is quick take on the mortgage rate. So we are seeing for the first time in 5 years that more homeowners have a mortgage rate that is above 6% than they have below 3%. So we are seeing a little bit more, buyers comfortable with the higher interest rate than before. So we're kind of those who have 6% or higher are outnumbering those who have that 3% or lower rate. So that ultra kind of low pandemic kind of rate did disappear over time. More homeowners are more kind of comfortable, kind of willing to sell, and those buyers are getting a little more comfortable with the rates where they are right now. So a quick snapshot of the mortgage rates for this week. As you can see, the 30-year did go up. Last week it was at 5.99, so we're back into the low sixes. And then as you can see, the 15-year, 30-year jumbo, FHA, ARM, and VA have also gone up. So mortgage rates have gone up since last week, but not to a crazy level that we're to be concerned with. But anyway, that's your update for this week. Let me know if you have any questions or if you want to dive deeper into your market. Happy to do so.